Hi, my name's Rupert Pontin and I'm Head of Insight and Communications here at Brego. Welcome to another slightly delayed Brego Leisure Intel broadcast, and this is for April 2026. And we're going to have a look at what happened in the UK leisure sectors during the month, as well as a short summary of the political position and the UK economy, and just have a look at what drove retail consumer behaviour during April. So without further delay, let's get underway, and we'll start with the economic update. So another month and the war in the Middle East is still underway, although it now seems to have reached an eerie, shaky impasse, with Iranian ports blocked by the Americans and the Strait of Hormuz still held to ransom by Iran. Now, Donald Trump is still issuing wild threats, but at least the violence seems to have been tempered, and the ceasefire appears to be holding, with the odd skirmish here and there either side. So in addition, the UK is facing some other difficulties. There's quite a lot of concern over the leadership of Keir Starmer at the moment, and that's been exacerbating the general economic malaise. It's not been helped by what happened in the local elections either. The April economic KPIs have taken a bit of a turn for the worst, as had been predicted and by many people expected as well, although the April inflation rate that was announced on May the 20th decreased to 2.8% from 3.3%, which really was a surprise to many, many people. Now, I've got to say, this is expected to get worse over the coming months as the cost of living continues to rise. When you look at the background details, you can see that food, for example, is rising at over 3.8% at the moment. And of course, you've got the impact of the rise in the energy cap coming to haunt us over the next couple of months. So the bank base rate remained level at 3.75%, although it has to be said, the Bank of England Monetary Policy Committee, they've signalled that rates will rise in the coming months, causing more anguish for borrowers and a further squeeze on econometric forecasts and the cost of living. The Consumer Confidence Index dropped by 4 points, and that now sits at -25. And we can expect this to get worse during May, as the true increase that we just talked about of the cost of living properly emerges and gets felt. In addition, the biggest worry, I guess, is the latest business confidence figure. Now, that is a quarterly figure, and it showed a big drop of 46 points to -65, and that is the lowest it's been since Q2 of 2020 during the pandemic. It's clear that costs are rising, and also order books are slimming down as well. So all is not well in the business sector, and we need to keep our fingers crossed for that. Interestingly, the average mortgage rate has improved slightly as a bit of confidence has returned, and that's dropped to 5.2% from 5.4% for a 2-year fixed period mortgage, although this has not really given a very stagnant property market any form of a boost. The ongoing closure of the Strait of Hormuz has seen the price of oil consistently over $100 a barrel, and this has meant the cost of a litre of petrol and a litre of diesel have gone a little bit further upwards, and they're now sitting at £1.58 a litre, up from £1.35 just before the war. So finally, the unemployment rate, that dropped to 4.9%, which again was a bit of a surprise, but we have been warned that this is off the back of sort of previous economic activity. And as we begin to feel the full effects of the war, I think we're going to see that increase again, which will be disappointing, but really to be expected, I guess. So sadly, this month's message is the same as last month, in that as a nation, we've got to prepare for further increases in the cost of living and more economic hardship. But I am sure we'll find a way through, and let's hope the government can help those that need it where it is appropriate. So looking at the UK leisure market, we're going to be using data from the Brego Whole Market Insight. So we'll start with touring homes. Total adverts for touring homes increased by 5.7%. That's off the back of 15.5% the previous month. So a more gentle increase. And this really shows that more stock is still coming to the market, but at that lower rate than it was in March. So this may well be as a result of part exchange stock coming from the improved sales volumes we've seen recently. And when you look at it in more detail, you can see that it's two-birth adverts that have increased by the largest amount, and there's a 12.5% increase in the number of two-birth adverts, and that was a 5.5% increase in March. And I think that may be beginning to suggest a little bit of oversupply for the time of year, and it is reflecting the sort of older caravanners that have swapped their units probably around the time of the show in late February. Four-birth adverts grew by a healthy 5.7%. That's off the back of 16.2% in March. That is actually the same as the whole market increase. And that in total, four-birth adverts represented 57.2% of all adverts in the market. When you look at sales volumes increased by quite an impressive 11.7%, not quite the 37.2% we saw in March overall, but still pretty good and is in line with what we'd expect at this time of year. If you look at the market share split, Two berths increased by 24.5% in terms of sales, and four berths were at 12.9%. And five and six berths, they increased by a much smaller 1.7% off the back of a 47.2% increase in March. So that's really balanced out, I think. So I think it's probably really interesting to see two berths jump so much, as four berth sales will probably see a bigger increase during April as families come back to the market and get ready for their summer holidays. From a days to sale perspective, that dropped to 48.3 from 63.4 the previous month, and that's an improvement of 15.1 days. And I think that really shows that the market has moved itself up again to probably a normal speed for the time of the year. In terms of average used touring home sale price, that dropped a touch just by 1.3% to £16,545. And for further context, just to look at it, how it's split, the average two berth price decreased by 11.2%, and four berth decreased by 1.6%, and five and six berth actually increased by 1.4%. So it's clearly showing that people are looking for the older, cheaper units. And that's a direct reflection, I think, of what's going on with the economic position at the moment. It could also be that we're seeing new buyers coming into the market, and new buyers tend to start at the bottom end with the first caravan that's more cost effective. So holiday homes, what's been happening here? Total adverts increased by a surprising 26%. So perhaps a little late in the market for it to improve, but it's not perhaps as good as it suggests. Perhaps it could be a drop in sales combined with an increase in stock. And given the time of year, that's a little bit of a surprise. And the increase in stock availability, I guess, is probably reflective of the increased sales that we saw last month. Sales indicated by the number of adverts that we see removed from advertising platforms during April, that saw a drop of 11.5%. So that's a bit of a surprise, where we saw last month a significant healthy increase of 53.1%. And that, again, is not what we'd be expecting for this leisure vertical at this particular time of the year. And I guess we've got to come back to the fact that that's perhaps the sort of family consumer confidence hitting the ability or the desire to buy a big ticket item of this type. Two-bed sales volumes dropped by 12.9%. That's off an 8.4% drop the previous month. And that's not far off the overall market figure. And in fact, the three-bed sales volume fell by 11.9%. And that is just 0.2% from the overall average. In this vertical, actually, it's quite rare for two and three bedroom data to be so closely aligned. So that's interesting in itself. Days to sale more than halved from 84.9 down to 40.7, and that really is good news and directly reflecting what happened during March. And that's a huge decrease there of 35 days. And that kind of reversed the change that we saw in March, where it went up by 34 odd days. And I guess this is far more representative of the time of year. And that, I guess, is a bit of a positive. We just need to see more sales. The average used holiday home sale price increased by 7.6% to £23,900. So motorhomes and campers, total adverts increased by 4.4% during the month, and that seems in line with market demand and current stock supply, so a little bit more coming in. And from a sales perspective during the month, we saw an increase, just a nominal increase this month of 0.6%, and that was off the back of last month's big 26.9% increase. Just so you know, the split was an increase of 4% when looking just at motorhomes, and 0.5% increase when you look just at campers. If you look at source of adverts, we look at trade adverts, they rose by 2.3%, slightly higher than the sales at 0.6%. And for the third month running, we saw private adverts jump quite significantly with an increase of 23.8%, but that was off the back of 86.7% in March. To have 3 months jump in such a way is pretty rare, although it does tend to be the time that private owners start to think about changing their unit before the holiday season starts properly. So I don't think we'll see the volume of private adverts increase significantly over coming months, but we'll just have to wait and see. From a days to sale perspective, they dropped significantly down to 75.9. And that's still a little high for this time of year, but I think it's more representative of the time of year and general retail demand. The average sale price of used motorhome and camper actually decreased slightly, down to 52,955 from 56,183. And this again highlights that sales success has been for cheaper models, and actually probably reflective of the increase in the type of older, cheaper vehicles that are on sale from private vendors. So to summarise Brego Leisure Intel for April 26, from a sales perspective, it's been good news for touring caravans and motorhomes and campers, recording an increase of 11.7% and 0.6% in sales, although holiday home sales did drop by 11.5%, which, as we said, is a bit of a surprise. The stock in market increased across all market verticals, which sometimes, as we know, means that there's been a slowdown in sales, but that's only been the case, as we know, with holiday homes. There was an increase of 5.7% for touring caravans and 4.4% for motorhomes and campers, and it probably just means that this reflected more part exchanges coming back from deals that have been done, particularly as a result of increased sales the previous month for holiday homes. But it does look perhaps that right now there is a bit of oversupply in the holiday home market. From a days to sale perspective, there's better news as the average for all market verticals decreased, and this is as expected, again, given the time of year and the leisure markets heading towards the busiest sales period. Looking at average sale prices, we see that tours have decreased by 1.3%, meaning that retail interest is for cheaper and probably older tours, a trend that's also experienced in the motorhome and camper vertical with a drop of 3.7%, although holiday home sale prices increased by 7.6%. So more activity at the higher end of the marketplace. Again, reinforcing the fact that perhaps families haven't got the money to spend or are not prepared to spend money at this time. Whilst April has been pretty good overall, we do know that the war in the Middle East is going to impact both the global and the UK economies further the longer it goes on. And inflation may have dropped slightly to 2.8%, which was announced as on May the 20th, but this is probably set to jump for the May figure. And interest rates are also cited to increase in coming months. So just something to watch out for as we see the impact of what's going on in the Middle East continue. One can only hope that the UK leisure consumer sticks to type and decides to holiday in the UK and spend money to upgrade their touring caravan, holiday home, motorhome or camper, as they've done in similar periods in the past where there have been difficulties globally. Now, I know you'll have found this a valuable review of the UK leisure markets, and if you want or need more detail, be sure to read the Brego Monthly Leisure Insight Report, and that can be found on the LinkedIn page and also on our website. Alternatively, just reach out to me either by phone, email or LinkedIn, and I'd be happy to forward it to you. We're now also posting insight and updates on our YouTube channel, which is called Brego-Official, so feel free to look that up and you can catch up on what's been happening in previous months. And if you're interested, Brego are now also posting insight and updates on the YouTube channel for other asset types as well, and you can see information on cars, motorcycles and so forth. In addition, you might also want to know that we now also sponsor the Dealerway DealerPod weekly podcast, and that is for cars, and we've also teamed up with Motor Trade Radio as their trade values partner, and during that we give a monthly summary of used car activity in the UK market. So finally, I just want to reiterate that if you want to improve your market insight and understanding, particularly around the nuances in today's UK leisure sector, then you need to speak to the Brego team. Now, the guys, Andy, Safi and Nick, they'd be delighted to show you how the Brego pricing and market data can help you to improve your understanding of the market as a whole, but also help you to set better, more relevant strategies and ultimately increase profitability for your business. Remember, they don't bite. They're here to help and empower you. So give them a shout, reach out to them. Thanks for your time, and I'll see you soon.